Welcome back. We're expecting a higher opening this morning from the broader averages. Dow Industrial set to be up about 70 points. We've got some concerns over a trade war seemingly easing this morning. Futures indicating a pretty good open. This would be the 8th day of gains, straight day of gains. Joining us right now is Craig Hodges. He is Hodges Funds Portfolio Manager. Craig, good to see you. Thanks so much for joining us.
Thank you, Maria. Great being here.
What do you think are the big issues for markets as we go into the next quarter and we see the first quarter earnings season winding down? What's most important for markets and investors right now?
Well, all of a sudden, as you know, we've got volatility back in spades. I mean, all of a sudden, since January. And, it really comes down to I did a little work on this, and midterm elections are extremely volatile. The average correction during a midterm year is around 18%. There has not been a decline in the S&P 500 since 1946, 12 months after a midterm election. So this one's very true to form. I think we're going to have a lot more volatility. But I also saw the fourth quarter, the average return in a midterm election is 7.9%. So I think we'll see a lot more volatility, maybe not a whole lot of progress till later in the year. As the market seems to be getting its foot underneath it. But, the backdrop's great, and earnings are good, and I actually like the way the market's trading here.
How about oil? Big upturn in oil. Is that going to sort of, dampen the party?
It could. That is somewhat of a headwind. You're hearing some of the airlines talk about the fact that that's hurting them a little bit, but that's easily overcome. And I do believe that the consumer is in a very good spot. The tax cuts for the consumers are just now getting hit. They're just now being realized. And so I actually feel pretty good. And debt levels are low. So the consumer's good. Companies are adjusting to that. So I feel like we're in a good spot.
Craig, Mitch Rochelle, I just want to go back to volatility, which you spoke about earlier. The VIX, which is the index that measures volatility, is going down, and it's below its 200-day moving average. Do you think that's a sign that sort of all of the volatility is behind us now at this point?
Somewhat. I mean, I think it was kind of a shock to see after almost 2 years of no volatility, all of a sudden seeing quite a bit. But as an active, manager, we actually like volatilities. You see really good companies that go on sale, especially this earning period. We've had one of the strongest earnings periods I've ever seen, but there's been a lot of real negative reactions to earnings on an individual company basis. So when the good companies go on sale, I think that's the time. And at the Hodges Funds, that's what we're looking for: good companies that can go on sale.
So let me just ask you: this week could be a really big week for a couple of sectors. We've got NAFTA, the deal coming due on the 17th or 18th. We've got the president making big announcements on going after pharmaceutical pricing. Tell me what you think might be most impacted this week by these, I guess, the things that could be volatile.
Yeah, it's tough to say if any one event. There hasn't seemed to have been too much going on actual news flow. I think it's more we're about 3/4 of the way through earnings period, and so it's starting to wind down. So once again, I would look at individual stocks, good companies that go on sale, and take advantage of the statistics I gave early. Kind of the first 9 months of the year, the market doesn't do much, and so kind of be opportunistic. And whatever the news flow, if you can find the opportunities in the market, that's what we're looking at here at the Hodges Funds.
Well, just on the drug pricing thing, the president didn't do two big things that he talked about on the campaign trail.
Yeah.
The importation of cheap drugs and negotiating the price of Medicare drugs, the government. And so he didn't do the major things that would have been bad for those very pharmaceutical stocks. Drug stocks rose after the president's speech. Merck up 3%. Regeneron Pharmaceuticals was up 6%. Biotech was up nearly 3%, outpacing the broad NASDAQ. So there's nothing in there that's going to jeopardize the drug sales for those companies, number one. And number two, we get lost. We can't see the forest for the trees because we've done this all of our careers. We watch the markets day in, day out. But even since those steel and aluminum tariffs the president started talking about them in March, the Russell, only one of the major market gauges, the Dow, is down slightly. All of them are up. The Russell's up 6.25%. That's a pretty incredible run for small cap stocks. So again, what might be bad for blue chips is great for smaller American companies.
And it sounds like, Craig, you're pretty constructive. Would you be buying these stocks today?
Yeah, especially in the small cap area. They're the most volatile. They're the ones that you can get the most opportunistic opportunities on, if you will.
Yep.
And as I mentioned, the backdrop's great, and I've never seen more confidence. We do about 3,000 company touches over about 800 different companies, and I've never heard more confidence with management teams.
No.
And and there's the tax cuts are just now hitting, and
yeah.
So I think most of these management teams are going to kind of under-promise and hopefully over-deliver. So
right.
The backdrop, I think, is great.
Right. I mean, that's why it's not really fair to say, okay, the money's gone into buybacks, because this is just the beginning of it. I mean, you really can't see the impact of a tax cut plan in the next 6 months after it's implemented. You've got to look long-term, and you think there's a real runway there then. Craig, it's good to see you this morning. Thanks so much.
Thank you, Maria.
Craig
Appreciate
Hodges.
it.
We'll see you soon, sir.